Welcome back, guys. This is part 6 of the video series on how to identify undervalued stocks, and this is specifically for beginners. If you're just starting to invest, this is the video for you. Don't forget to look at the previous parts before you watch this video. So in the last video, we were able to compute the future value of the company and we came up with a number 500. So how did we arrive at that value? How do we compare different companies that we have shortlisted, and how do we find the value in the future? This is where your expertise comes into play. You are a consumer and you know better than others whether the product is selling, what is the margin that they might be having, because you can compare it to other companies and you can see how much are they making, and is it a premium product. If they sell a bike that's selling at 2x the cost of an average bike with the same specification, then you know the margins are a little higher and you can figure out a ballpark. So you have more expertise than anyone else. That is the reason why you're picking these stocks. Now you need to do something like a bottom down approach and top to bottom approach. I'll tell you what it is. So we need to know the size of the market. How big is the market? How do you know that? Let's take an example. In 2016, there is a number that is attached to the number of middle class. It was arrived at 267 million. Now, if you look at the past growth, and if you can do some basic analysis looking at other people's views, for example, you will see that the growth rate is at least 100% in a decade. That is, it will double every 10 years. This is a very conservative approach. The values might vary from doubling to almost double and a half. But let's take the conservative value. A lot of people agree that this is the trend. Their valuation would be in the same ballpark. And since these are macro assumptions, we will take a conservative value as our variable. So now in 10 years you will have a value. What would be the market size of middle class? And now you need to look at your company. You have selected a company. Find out what is their current market share. If you open their annual report, most probably you will get that straight out of the book. Otherwise, it's not difficult to find that out. For the AC industry, you can easily get the market share for each players. All the public listed players provided in their annual report. Now, you know how much the middle class population is going to grow and how much is the market share today, and you can see how the market share has been changing. If you take a company, a small company, for example, in the AC segment, they are growing their market share very rapidly because their current market share is around 2%. But the other one with 20% is growing a little slowly. So you can figure out what the market share would be in 10 years. Probably much more for the smaller guy and not so much for the bigger guy. Or you can say the other way around. It's your story. You need to find that out. And you can easily find that out. It's not really difficult. So now you know the growth rate for the middle class and you know how much market share they will have. Multiply these two, you will get the value of their future earnings, future revenue. Now you need future earnings. So you know the revenue, what is the size of the market, based on middle class population growth, you are able to compute that and multiply by the market share, you get the total revenue. Now this revenue has to be multiplied by the profit margin to come up with the earnings per share. So the profit margin, you can look at historic value and see how they are able to grow, look at how well they are doing, can they increase or will it go down? You have to figure that. It's your story again. So you figure that out and you multiply that with the revenue, you get your earnings per share. This is your future earnings per share. As discussed in the earlier video, after that it's very simple. Plug it in your Excel sheet with a very simple formula. In a minute, you get a value. That's your current price. Look at the price in the market, compare it with yours, add some margin of safety to make sure you don't invest it at a higher price, and here you go. You are able to buy a company now. As a beginner, you have made a great accomplishment. Good luck. As mentioned earlier, there are previous parts here and there are other parts that follow this video. Make sure you look at the entire series. And don't forget to subscribe to this channel. Thank you. Bye-bye.